You're entering the future-ready CNBC-TV18 eBix Cash Studio.
Hello and welcome to Startup Street from the CNBC-TV18 eBix Cash Studio. I'm Shruti Mishra and with me is Mugdha Warrior. These are the top headlines from the startup space. Zostel approaches Delhi High Court, seeks restraint on Oyo shareholding prior to its IPO, claims it is entitled to 7% shareholding in Oyo. Meanwhile, Oyo rejects Zostel's claims, argues that all claims are in dispute. Zostel asked Delhi High Court to direct Oyo to not take precipitous steps. Delhi High Court to hear matter on October 7. Live online tutoring platform Vedantu becomes a unicorn, raises $100 million in Series E funding, led by Singapore-based impact investing fund ABC World Asia. Debt platform Cred Avenue raises $90 million in Series A round, led by Sequoia Capital India. Other investors such as Lightspeed, TVS Capital Funds, Lightrock Cred and Stride Ventures also participate. Health tech platform MFine raises $48 million in Series C funding, co-led by More Strategic Ventures and BNext, with participation from existing investors like Stellaris Venture Partners, SBI Group Japan and SBI Venture Capital Singapore. Cloud-based customer engagement platform Zostel raises $35 million as a part of its Series C funding from IIFL AMC, Systema Asia Fund, CX Partners, Singularity Growth Opportunities Fund, and ex-CEO of Vodafone, Arun Sareen. Existing investors Bloom Ventures and A91 Partners also participate. SoftBank is in talks to lead a $100 million funding round in Global Bees at a valuation of $500 million. Global Bees had raised $150 million in seed equity and debt funding in July from SoftBank, Premji Invest, Chirate Ventures, Chris Capital and Lightspeed India. That's a Money Control exclusive. South Korea asks Apple and Google to turn in compliance plans for the new South Korean law on app stores. The new law bans major app store operators from forcing software developers to use their payment systems.
Well, those were the headlines we're tracking for you today. Now on to an important story. Just as hospitality company Oyo is set to file its DRHP for its IPO very soon, another hospitality company, Zostel, has thrown up a legal challenge over merger talks that both companies had held in 2015. Now, Zostel has sought protection of the shares that it claims it is entitled to in Oyo ahead of the IPO. Zostel had won an award from an arbitral tribunal earlier this year, which had said that the term sheet between Oyo and Zostel is binding. Zostel claims that the award grants it 7% shares in Oyo and has now moved the Delhi High Court seeking protection of the shares in the company as Oyo prepares for an IPO. Oyo has sought a stay on the award and both appeals will now be taken up by the Delhi High Court next on October 7th. Zostel told the Delhi High Court on Wednesday that Oyo is planning an IPO and has converted itself into a public company, and that if the IPO goes through, shares will not be available for Zostel. Zostel's counsel went on to say that their intention was not to stop Oyo's IPO, but they have asked that the shares of Oyo be kept in an escrow. It asked that Oyo not take any precipitous steps, and Harish Salve and Mukul Rohatgi, who are appearing for Oyo, said that the demands were not agreeable and that Oyo rejects all the claims made by Zostel. Now, in a blog on Tuesday, Oyo had said that the tribunal award does not provide any relief that entitles Zostel to seek to freeze Oyo's shareholding pattern, and that the award in itself has not issued Zostel or any of its shareholders any shares in Oyo. The matter will now be heard on October 7th. Over to you, Shruti.
All right, Mugdha, thank you for sharing those details. Moving on, live online tutoring platform Vedantu is the latest startup to join the unicorn bandwagon. The EdTech venture has raised $100 million in its Series E round, led by Singapore-based impact investing fund ABC World Asia. The round also saw strong participation from existing investors Coatue, Tiger Global, GGV Capital, Westbridge, among others. With this round of funding, Vedantu's valuation now is at $1 billion round is expected to close over the next few weeks, with more investors joining in subsequent tranches. To talk to us about the milestone and the business growth at Vedantu, joining me now is its co-founder and CEO, Vamsi Krishna. Vamsi, welcome back to Startup Street and many congratulations on turning into a unicorn. Vedantu becomes the fifth EdTech startup to reach the unicorn status, joining Byju's, Unacademy, Upgrad and Eruditus. What kind of growth has come for the company as you hit this milestone?
Thanks, Shruti, for having me over, and thanks for that. Overall, EdTech has seen strong growth. Definitely, pandemic and COVID has been really, the big push-up in that regard. So last year, in fact, we have grown on all core metrics like revenues and students almost 4.5 times. But not just that, Shruti, I would like to add that even now, with many schools opening up in many parts of the country, even now we are still seeing a 3x kind of a year-on-year growth trajectory, and growth continues to be strong.
All right, Vamsi, you plan to use the funds to strengthen product engineering functions as well as expand into newer categories. Elaborate on those plans. What are the new offerings going to be?
We have always focused as our core in K-12, and in that we specialize in live online classes. I'm sure, as you know, that live online classes as a category is something Vedantu started way back in 2014. It's obviously now has become mainstream. But in K-12 itself, there are a lot of categories wherein we wish to expand in the next 12 to 15 months. For example, extracurriculars is a new category which has really come up, and there's a lot of interest we are seeing there. So that's definitely something which we are very bullish on. And apart from that, currently at Vedantu, we are majorly English and English as languages. And increasingly, we are seeing a lot of demand for vernacular languages. So that continues to be another area which we'll focus on.
So we'll see Vedantu going into more different languages, vernacular languages, as well as the focus is going to be on extracurricular learning. Vamsi, you also plan to use the new funds to grow inorganically. Are you currently in talks with companies for acquisitions? And what kind of verticals are you looking at?
Yes, Shruti. So last year we did 2 acquisitions. Those were primarily product acquisitions. As per the future, definitely these areas which I just mentioned to you, in all of these areas, we definitely look at build versus buy decision. So when we are looking to venture into any new category or any new segment, we definitely also look out for other companies with great teams which have built a beautiful products. So we obviously then consider a build versus buy decision. And inorganic acquisitions and M&A is definitely something we'll be open for.
All right. Speaking about M&A, the EdTech sector is currently very hot on the whole M&A theme. There were reports of Byju's acquiring Vedantu, which you had clearly denied. Are you not open to getting acquired?
Yes, Shruti, we obviously, when those rumors were floating around, I went on record and strongly denied that, because that's the truth. And especially when you are in a category which is largely still underpenetrated. Like all the online companies today combined would be less than like around 5% penetrated. So when you have 95% still underpenetrated, and as a company when you are growing 3 times, 4 times year on year, I know it's obviously like makes sense for us to continue to build and continue to grow and continue to create impact in scale.
Okay, all right. Vamsi, you spoke about Vedantu's growth. You've catered to over 200,000 paying students last year, 300% growth over the previous year, like you mentioned. And also, it's accompanied by a revenue increase of 4.5x over last year. What has led to this growth, and which verticals are clocking high demand?
Oh, across the verticals, Shruti. So definitely when the whole pandemic happened and this whole, adoption of online really went through the chart. We all know the situation. All the